Welcome back to Investing Talk Podcast. Today, we're tackling a question that keeps popping up. Is D-Wave Quantum a good time to buy right now? We've gathered all your sources, articles, research, notes to really get into this fascinating company. And before we dive in, if you find these conversations helpful, please do subscribe, like, maybe leave a comment. It really helps us out. And if you're feeling generous, hey, consider buying us a coffee. Plus, definitely let us know in the comments if there's a specific company you want us to analyze next. Okay, so D-Wave Quantum, the name itself sounds pretty futuristic, doesn't it? Quantum computing still feels a bit like science fiction for many, but they're a real company doing real things. For anyone maybe less familiar, what exactly do they do? Why are they seen as a leader?
Yeah, it's a great place to start. What's really interesting is D-Wave is a leader in practical quantum annealing systems. Basically, quantum annealing is good for solving really complex optimization problems. Think like massive logistics puzzles or discovering new materials.
Okay, optimization, so finding the best answer out of tons of possibilities.
Exactly. Way faster than a normal computer could for certain problems. And they've made big strides, like with their new 4400 qubit Advantage 2 processor. A qubit is the quantum version of a computer bit, but much more powerful. This Advantage 2, it really outperforms their older tech on benchmarks. They're making it tangible, you know?
4,400 qubits, that sounds impressive. So the tech is cutting edge, but, as investors, amazing tech doesn't always equal a great investment, right? Let's dig into the financials. What's the reality there?
Right, and, well, the numbers are pretty stark. The sources show revenue, trailing 12 months, TTM, was about $22.28 million.
Okay, $22 million.
But, and this is a big but, they're deeply unprofitable. Net loss was over $281 million. That's an EPS of minus $1.10.
Wow, over $280 million loss on $22 million revenue.
Yeah. And recent revenue growth, almost flat, just 0.79% growth reported for 2024, up to $8.83 million. Meanwhile, the annual loss actually grew by nearly 74% from the year before.
Oof. Losses growing that much faster than revenue. It sounds, well, concerning. What does that mean for their financial health going forward?
It definitely raises questions. The sources describe their financial position as precarious. With losses like these and negative cash flow, there's a real risk of future dilution, meaning they might need to issue more stock to raise cash.
Which isn't great for current shareholders.
Not usually, no. Or they take on more debt. The bottom line is their future earnings are totally speculative right now. It all hangs on whether they can actually commercialize this tech at scale.
And it's not like they have the field to themselves, right?
Not at all. They're competing against absolute giants. Think Alphabet, Amazon, IBM, companies with incredibly deep pockets, all pushing their own quantum research.
So a tough competitive landscape, too.
Definitely. It makes D-Wave's path to actually making money even more challenging. They need to prove their specific approach. Annealing is the best for certain commercial problems and fast.
Okay, so challenging financials, tough competition. How is the market actually valuing this company right now, given all that uncertainty?
Well, this is where it gets really interesting. The valuation is described as ultra premium. The stock, QBTS, is trading at over 172 times its projected 2025 revenue.
Wait, 172 times projected revenue? Not current.
Projected, yeah. For context, most tech hardware companies trade at, maybe under 20 times sales, often much lower.
Okay, that's a massive difference.
It is. And because they're losing money, there's no PE ratio. And negative equity means no meaningful price-to-book ratio either. It's all about future hope.
So a valuation like that, it implies investors expect truly massive success, almost perfectly executed.
Exactly that. It suggests the market is pricing in huge market share gains and major tech breakthroughs down the line. There's basically zero room for error or delays. They need to hit home run after home run on a future that's still, pretty speculative.
Okay, let's shift to the stock itself.
Yeah.
How has it actually been performing? What's the technical picture look like? Has it been volatile?
Oh, incredibly volatile, a real roller coaster. It's currently around $15.54, but the 52-week range is huge, from 80 cents up to over $20.
Wow, 80 cents to over $20.
Yeah, it had a massive surge, up something like 992% in the last year. Though that momentum seems to be cooling off a bit now. The RSI, the Relative Strength Index, is around 60.8. So firm, but not technically overbought yet.
Okay.
And the price is currently below its 50-day moving average, which is $16.62, but still way above the 200-day average of $9.74 sense. Kind of reflects that big run-up and then some recent consolidation or pullback.
Well, the mixed technical signal then, that kind of volatility. What's the general market feeling, the sentiment around D-Wave?
Well, the volatility rating is high, 7.51%, and recently fewer than half the trading days have been positive, only 40%, so still choppy. Interestingly, even with D-Wave's past surge, the broader market fear and greed index is actually showing fear right now at 39.
A disconnect there.
Yeah, and if you look at social media forums, the sentiment on D-Wave is kind of neutral to positive, but everyone highlights how speculative it is. It's seen as a trader's stock, maybe, not a stable investment.
Okay, this is fascinating because despite the losses, the valuation, the volatility, analysts seem pretty bullish, right? What are they saying?
They really are. It's quite a contrast. The consensus is a strong buy. We're seeing 10 or 12 analysts with price targets mostly between, say, $17.33 and $19.40.
Suggesting maybe 20–25% upside from here.
That's what they're implying. And the highest target out there is $30, though the lowest is $9, so there's still a range.
What's driving that optimism, do you think? Is it just the tech potential?
Mostly, yes. It seems tied to recent product milestones, like that Advantage 2 processor. But the reports don't mention any major new customer wins or partnerships recently driving these ratings. So it really feels like analysts are betting heavily on future execution and market adoption, looking past the current financials.
So if someone is watching this stock, what are the key things to look out for in the near term? Potential catalysts.
Definitely the next earnings report. That's expected around August 7th, 2025. That'll be huge for checking their progress, revenue, cash burn.
Any surprises there could move the stock significantly.
For sure. Other things. News about actual commercial contracts. A big enterprise deal or a government contract would be very positive. Also, any major tech updates or even just sector news and how competitors are doing can cause swings.
And thinking longer term, what could really drive significant value here if they manage to pull it off?
Long term, it's all about sustained commercialization. Getting their cloud platform, Leap, and their hardware widely adopted by paying customers. Big government or enterprise contracts would be key. Major breakthroughs in quantum algorithms could open new doors. And, in this field, you can't rule out M&A. A larger tech company might decide to buy D-Wave's expertise. That could unlock value, too.
Okay, so huge potential, but we have to talk about the other side. The risks must be just as significant, right? What should people be really mindful of?
Absolutely, and this is crucial. The specific risks for D-Wave stock are, well, substantial. First, the ongoing losses and cash burn. That's a big one. How long can they sustain that? Then there's the extreme valuation. It leaves no room for error. Any misstep could hit the stock hard, and they're totally dependent on staying ahead technologically, constant R&D, which is expensive.
And beyond D-Wave itself, what about the risks for the whole quantum computing sector?
The whole field is still speculative. Timelines for broad adoption are really uncertain. When will businesses need this? Plus, that intense competition from giants like Google, Amazon, IBM, they have resources. D-Wave just doesn't. And market sentiment can shift fast. If investors lose patience with story stocks or if breakthroughs take too long, money could flow out quickly.
Okay, so bringing it all together, D-Wave Quantum. As an investment right now, what's the final take based on all these sources?
Well, based on everything we've looked at, our overall rating comes out as a 4 out of 10.
A 4 out of 10, so leaning negative despite the tech leadership.
Yeah, because while they are definitely a pioneer in quantum annealing, the fundamentals are just weak right now. Large growing losses, very slow revenue growth, and that really staggering valuation. That's the core issue.
It really highlights that clash between exciting future potential and the current difficult financial reality.
Exactly. You have analysts who are very optimistic, seeing upside potential based on the future promise, but that optimism seems a bit disconnected from today's numbers and the significant risks involved. Volatility is high, dilution risk is real, losses are substantial, and we still don't know for sure when or how this whole sector becomes truly commercially viable at scale.
So this raises the key question for you listening. How does a company like this fit, if at all, into your investment strategy? Who is this actually for?
Our analysis suggests this is probably more suited for short-term trading, for experienced traders, people comfortable with high risk who are maybe playing momentum around news or catalysts. It doesn't seem advisable as a core long-term buy and hold investment right now. Not until we see real sustained revenue growth and those losses start coming way down.
A clear distinction then. Potential versus present performance.
The risk profile is just very high for a traditional long-term approach today. It requires a specific appetite for speculation.
So, for you, the listener, it comes down to how much are you willing to bet on that future promise versus the current numbers? Is D-Wave the start of the next computing revolution, or is it still a very speculative gamble? Lots to think about there. Thank you for joining us for this look at D-Wave Quantum. We hope this gave you a clearer picture to help your own thinking. Until next time.